The Royal Bank is Canada's largest chartered bank and financial institution, and they are as blue chip as they come. They may nickel and dime you as a customer with all those service fees, but we are here to find out if they are a good investment. Count your deposits, folks. This is going to be a good one. When someone thinks big Canadian bank that began in Nova Scotia, I'm willing to bet you're not thinking about the Royal Bank of Canada. However, they began way back in 1864 as a single branch in Halifax, Nova Scotia. Just to put this in perspective, while Haligonians were banking at the Merchants Bank of Halifax, America was still in the grips of the American Civil War. By 1901, the Merchants Bank of Halifax changed their name to the Royal Bank of Canada, as they had already expanded to become part of our national banking landscape. The modern RBC is still huge in Canada and have expanded well into the international stage. They currently can be found in more than 40 countries in the Caribbean, the US, the UK, Europe, and Asia. Join the conversation. Let us know in the comments if you hold any shares of Royal Bank. Your participation is well appreciated. Don't forget to like and subscribe to stay up to date on future content, and a huge thank you for that click. The Canadian banks have been struggling in 2022 as the Bank of Canada began their battle against inflation. Rate hikes did mean that banks would collect more interest, but that can be a double-edged sword, as people with variable rate mortgage were soon to find out as they began to feel that squeeze. The low interest rates of the pandemic were over, and many folks were not really ready to experience higher interest rates. The stress of these losses, as well as other borrowing-related losses, was going to hit the banks, and I mean big time. Royal Bank was absolutely not immune to the banking issues, and they did struggle quite a bit in 2022. Some investors became nervous about holding bank stocks, while others loaded up on these stocks at a discount. How often can you get higher yields in a blue chip stock at a crazy discount price? It does seem like a no-brainer, as there is lots of money to be made as the banks recover. However, to really get to the nitty-gritty of whether they are a good investment, we need more than words and blue chip statuses. We need to check in with our good old buddy, Mr. Math. As usual, we'll begin with a little bit of surface data. And the Royal Bank, they have a market cap of $176.53 billion. Their beta comes in at 0.98, so they're no more volatile than the market average. Their earnings per share, that comes in at 10.14, and they have a price to earnings ratio of 12.20. That, of course, ranges amongst the big six, beginning with the Bank of Nova Scotia with a nice low 9.4, going all the way up to the highest, which is, yeah, you guessed it, it's Royal Bank, with that 12.2. When we look at their price to book ratio, that comes in at 1.69, average being 1.1. Scotiabank also led in this category amongst the big six. Now, their return on equity, it's not bad. It comes in at 14.12%. When I look at these numbers in comparison to the other big six, they almost say, well, maybe they're overvalued compared to the others, but I already know this entire sector is down big time, so they're definitely going to come in as undervalued, but we'll find out that, of course, in a moment. Let's switch over and take a look at their cash situation. Their revenue comes in at $51.46 billion with earnings of $14.08 billion. In fact, those earnings, they are projected to grow by 4.25% per year. All right, let's look at their free cash flow. That comes in at a staggering negative $41.34 billion, and their operating cash flow, just as bad, negative $38.48 billion. Yikes! Remember that world of pain I have been saying our banks are experiencing? Well, this is a very good indication of that. These two statistics, they do kind of scare me. I will not lie about that. Their current value comes in at $126.28. Their fair value comes in at $167.62. That makes them undervalued by 24.9%. Of course, the whole banking sector is undervalued, and they're probably going to be undervalued until we see a recovery in that sector. Not sure when that's going to be, but there is definitely still some future pain coming. In the meantime, let's switch over and take a look at returns. We'll start with their dividend. They have a yield of 4.291%. That is paid out quarterly in the amount of $1.35 per share. Their payout ratio comes in at 51.0%, so it's pretty sustainable. When we look at their 3-year, their share price rose from $101.70 all the way up to $126.28. That is a return on investment of 24 24.17%. Factoring in those dividends, we get a total return of 38.01%. That's not too bad. Let's take a look at their 1 year. Their price rose from $120.16 up to $126.28. That is a return on investment of 5.09%. That is a total return of 9.42%, once of course we factor in those dividends. So far this year in 2023, their share price has fallen from $128.41 to $126.28. That's a return on investment of negative 1.66%. We do get back into the positive once we add in their dividends for a total return of 0.40%. Now, these numbers don't fully impact how bad things have been for the banks. To do that, we kind of need to take a look at one little thing. Royal Bank, they peaked at $139.64. So currently they are off peak by 9.58%. So that's significant, showing that there is some significant room for some growth with this stock. And now it is time to take a look at their debt, and I have a feeling we're going to see some pretty big numbers here. Their total debt comes in at $427.02 billion, and they have a total equity $11.35 billion. That gives them a debt to equity ratio of 383.5%. Normally, this debt to equity ratio would scare me big time, but we are dealing with a bank, and lending money as well as borrowing to lend more money is a part of the business model. So higher debt to equities are 100% normal. There is, of course, one little ray of sunshine, and that is their cash and equivalents. That actually comes in at $709.13 billion. This is a number I love. They have an ace up their sleeve if they need it. Let's take a look at their short term and their long term. So short term, their assets come in at $796.86 billion. That's not bad. However, their liabilities come in at $1.54 trillion. Let's take a look at that long term. So their long term assets, that comes in at $1.14 trillion, and their long-term liabilities, much better, $292.61 billion. Short-term assets actually do cover their long-term liabilities, so they do have that going for them. Also, you have to kind of look at the type of liabilities they have. 66% of them are from very low-risk sources, which makes them even better. Royal Bank also has a very good allowance for bad loans, so they are preparing for what happens when the fixed-rate mortgages hit the renewal wall. It is not going to be pretty, but RBC has the pockets and the preparation in place to weather that storm. So what is the final verdict? The big six are going to recover. That is something I am certain of. Is Royal Bank the best one to hit your investment to in the banking sector? If you are looking for great passive income, then this is not the bank for you. Their 4.25% is small compared to some of the others. Bank of Nova Scotia, BNS, has a 6.65% yield, which is one of the higher ones. With total growth and growth investors, once again, there are banks that potentially may offer more growth overall. CIBC offers a 6.257% yield, and they are much more undervalued, so total investment wise, they may be the play to make. Of course, you do have to keep in mind that just because Bank A is more undervalued than Bank B, that's no guarantee that Bank A will outgrow Bank B. It is merely a game of probability. In the end, Royal Bank is lagging in this group of banks, but they will recover just like the others, and that means an investment in them will make money, and perhaps they will surprise us, though I don't expect them to do that on the dividend front. Even with blue chip investing, it's still your money that you're putting on the table, so be sure to do your due diligence and make sure you throw in a good amount of research before you jump on any of these banks. Keep the learning going. Watch my video on buy the dip stocks linked on the left, or test YouTube's recommendation skills by checking out the video on the right. Your choice will decide the winner, and I will see you in the next video.